The minutes from the Federal Reserve's latest meeting showing central bankers resolved to keep fighting inflation with interest rate hikes. To talk more about this, let's bring in former Dallas Fed President Richard Fisher. He's a senior advisor to Barclays. He serves on the boards of Tenet Healthcare and Warner Brothers Discovery and as a CNBC contributor. Thanks for joining us, Richard. And I did feel a little bit of a sense of deja vu when I heard higher for longer, because that's been the mantra now. I remember the actual Powell speech when it wasn't really obviously I won't use the word pivot, but it wasn't really a change. But this is something that I think they said when they were going to go down from 50 or 75, where they said, yeah, we'll go in smaller increments, but we may eventually go higher and we may be there longer. So we should have listened back then, because this is not new.
As I told you that back then. But anyway, there we have it.
Yeah, there we have it. Yeah.
Look, Joe and Melissa and Andrew, we're living in, depending on your time frame for discounting future profits and cash flow and so on, we're living in a 4 to 5% world and possibly a 5 to 6% world. Depends on where you are in terms of the maturity of the risk-free rate. So get used to it. I mean, it just means things still haven't, in my view, properly adjusted for that, because there was all this hope that they would start cutting rates in this year. I don't think it's going to happen, obviously, and that they might not hold for some time, and they might not go higher. Well, they're doing all three. That is, they're going higher and they're holding, and I doubt we're going to see much reduction till they're absolutely sure they have inflation back in the jar at 2%. So get used to it.
Yeah, where's the rub? Where's the inflation? What's really causing it? What did you make of that jobs number, Richard? And it's not likely to repeat. Could be revised. I guess the inflation numbers.
Always get revised, Joe, as you know. This is why you can't rely on those immediate releases and do, quote, instant analysis, which is an oxymoron. You just have to wait. But I did find that your all's interview with the CEO of ZipRecruiter yesterday to be an interesting sign. Obviously, hiring is slowing down, particularly with the small and medium-sized companies. If you look at the NFIB, the Federation of Independent Businesses reports, they're being hamstrung here, but they still are being pressed on the size of total comp increases. So I think that's where it's coming from. We had a wage price spiral. They're trying to cure it. And the good thing is, Joe, since if you have a job, you consume, even though the savings rate has come down, these workers are still consuming. And the numbers on retail sales and others were still very up in January. That's good for the economy. Remember the equation, C plus I plus G plus or minus X. That's all you need to know, by the way, to be a central banker. C is consumption. That's 70% plus of the equation. I, investment. G, government. Net exports is plus or minus X. And right now, C is still running pretty strong.